Red Compass is a legal and regulatory compliance firm where businesses with their legal and regulatory needs across various jurisdictions. Maiden, who is partnering with Red Compass for this webinar, is a financial technology company specializing in innovative payment solutions for regulated industries. So their suite of products include card APIs, accruals, global treasury, core banking that helps businesses build and manage payment programs with security, compliance, and control. So that I don't waste too much of our time and we can get to the very interesting part of this webinar, I would introduce our two speakers, Japhet and Koinsola. I'll be saying a few words about them. I would also allow them introduce themselves, maybe say a few words about themselves. Japhet Ghana is Yellow Card's current Group Head of Transaction Risk and Financial Crime. He started his career at GT Bank, where he worked with different departments while he was there, and then he later joined Kuda as part of their fraud management team. He holds an MBA from Ahmadu Bello University and is a certified fraud examiner, a certified cryptocurrency investigator, certified financial crime specialist, Chainalysis Reactor certified, and microfinance certified banker. He is also a member of a number of institutions like the Chartered Institution of Loan and Risk Management. Is an active member of ACFE, ACFCS, and ISACA. Japhet currently in his current role as a seasoned professional with fraud management, transaction monitoring, financial crime prevention, and compliance, leads Yellow Card's transaction risk and financial crime, like I mentioned earlier, and he leads the group. So he does this, or he works with he leads the company on this in this department across 34 different markets. So welcome, Japhet, and thank you for joining us today. Our next speaker is Koinsola Ajayi. Koinsola Ajayi is the current operations lead at Maiden. She also holds a BSc and MBA. Before she joined Maiden, she has worked as a senior reconciliation and settlement personnel in different financial institutions in Nigeria, from Kuda to OPay to Spectra Technologies. In the course of our decade-plus experience as an operations and settlement and reconciliation specialist, she has helped businesses grow and ensure that their settlement and operations department are well run. And in her current role at Maiden, she helps with payment processing, settlement, reconciliation across all the markets that Maiden is live in today. Thank you, Koinsola, for joining us, and welcome. I would leave the floor for the speakers to speak about themselves if they want to before we start. But we're 10 minutes in, so with your permission, I would like to maybe skip that part till the end, if that's okay. Okay. That's okay. All right. Thank you very much. So I will just jump right into it. We'll take questions at the end, and please, our speakers today are very seasoned, so please let's take time to listen to them, put down our questions if we have any, and we'll be able to answer them at the end. And any questions we are not able to answer at the end, we'll send it to them and then send you written responses via email based on the registrations we've all done for this webinar. So I think my first question would go to Japhet. For a business or a fintech, we know that banks are highly regulated, but for fintechs today, we want to offer card programs. What is the minimum compliance requirement that they need to put in place to say that, okay, we want to kickstart? What are the minimum things that they cannot do without like putting in place?
Okay, thank you so much. Just to confirm, can you hear me? Can everyone hear me?
Yes,
Yes.
Okay, awesome. At a minimum, fintechs will need to think in terms of end-to-end risk coverage, not just about isolated controls. For a card program, they need to look at the whole pillars, starting from KYC, KYB onboarding framework, and then from KYC, they'll move to the transaction monitoring and financial crimes framework, down to sanction screening, and then dispute management. So basically, all of this would work together for them to achieve a minimum compliance framework, a minimum framework for the card program. And without like the KYC aspects, which is foundational, without that aspect, it means you're basically losing a leg of the foundation. You're basically losing, support that is supposed to make you thrive within the card environment. So yes, KYC, KYB, transaction monitoring, sanction screening, dispute and chargeback management framework.
Yeah, thank you so much, Japhet, for that response. I think I'll leave my follow-up questions till later. But my next question will be for Koinsola. We know that, while equal parts, operations very important and compliance for a card program, but from a governance control perspective, just piggyback on what Japhet just mentioned, what should fintechs, sponsor banks and like card scheme, what are the things that fintechs need to like put in place for sponsored banks to be comfortable with them, and then for the card schemes to also be comfortable in like onboarding them or dealing with them?
All right. Thank you very much, Rama. So in terms of governance between the three entities, that's the bank, the sponsor bank, the fintech, and the card scheme, what they really want to see is that there are no gray areas, right? So you want to be sure that each parties have clearly defined responsibilities. So for instance, we all know that the sponsor bank owns the regulatory accountability and even the card being right. You as a fintech now, you own the day-to-day running of the card programs, the daily operations and the controls in place. And the card scheme sets the network rules, right? So there cannot be any ambiguity around who owns what. You have to have clearly defined responsibility for each parties. You cannot be unsure as to who does KYC or who does transaction monitoring and the likes, because when that happens now, responsibilities can now shift, right? When an incident occurs, it's not going to be who is responsible for this. I thought you were responsible for this. So how you can sort of manage that is to have like a very strong SLA in place that clearly defines everybody's roles and responsibilities, and also in terms of liabilities as well, who is responsible for what. So once you have that in place, the sponsor bank will be comfortable with you because now you look like you know what you're doing, right? And the card scheme as well, you're able to manage your entire program around just their set rules. So that's how it will just work. All that is needed is to have clear ownership mindsets. You know who is responsible for what, and you need visibility as well. You need to see what is happening end to end across board. So even though you might rely on third-party tools as well, but when the regulators come, when your sponsor bank comes, they're going to be asking you questions. So you need to know what exactly is happening at every point. Even though you're using a third-party tool, you need to be accountable. So even when you've outsourced some of these things, you cannot outsource accountability. So everything still comes back to you at the end of the day. Thank you.
All right, thank you so much, Kainsola. I think just to give some sort of like background, which I should have mentioned, for most fintechs to be able to connect with card programs, which is Visa, MasterCard, or all the other card programs, they need to have a sponsor bank. That is commercial banks who have reconciliation and settlement capacities by regulation. Just for people in the audience who might have been a bit lost by those terms. So I would move, my next question would be for Japhet. So card schemes have rules, and there's been a lot of conversations around card programs being heavily regulated, because on one hand, you have to comply with the regulations of your primary regulator or the terms that have been set by your partner. At the same time, you have to conform with the regulations that have been set by the card schemes. How do fintechs ensure compliance with these rules? And without necessarily breaking the bank to do it, and also ensuring that they're in compliance with the rules that have been set both by their primary regulators or their partners and the card schemes.
Thank you for that. So the starting point is really understanding that card scheme compliance is not optional. It's basically contractual. You've signed a document to onboard with them. So when you operate a card program, you must, in fact, you are basically operating within the rule book of the network. They've given you like a whole book of rules that you must apply, rules that you must conform yourselves to. So in practice, it means, I think, three major things. One is translating these rules that the card schemes have given, translating the scheme rules into internal policies, into control documents, into operational, step-by-step guide, operational framework within the institutions. And then from operationalizing it, you are able to comply, you're able to, monitor compliance to the rules that the schemes have put out there. Then the second would be embedding those controls, those policies, embedding them into your product, into transaction flows, embedding them into the end-to-end processes, so that you're able to also track compliance at each of those levels, at each of those processes. And then the third would be continuously validating that those controls that you've set in compliance with the rules that the card schemes have put in place are working as expected. Basically monitoring that these rules you're trying to comply with, these controls you've put in place, are they working as they should? Are there alert systems that will trigger when the control fails? So basically, these are just some of the ways, but I've highlighted three, some of the ways to complying with the rules for the card scheme.
All right. Thank you so much, Japhet. So based on what both speakers have said so far, from a background perspective, for compliance, KYB, KYC, from governance, setting the rules, the liabilities, the responsibilities, all those things are important for initial groundwork. Also, having your three pillars in place, like Japhet just mentioned, in terms of ensuring that you're translating the rules properly into internal policies, and you're putting all the necessary control documents in place. So I hope that we've been learning a couple of things from the speakers. Thank you so much. My next question is for Koinsola. So from an operational perspective, we know that for any technology-based program to work well, infrastructure is very important. So what are the core infrastructures that you need to have in place before you can launch a successful card program?
Thank you very much, Rama. So I think that some of the core infrastructure that you need to have in place before launching a card program, I think the most important thing, number one, is to have a stable processing and authorization setup. Because at the end of the day, if you cannot authorize transaction consistently, there's really nothing else that matters, you know. So you have to make sure that you have stable connectivity on that leg so that your transactions can flow seamlessly. And I think the second one would be your KYC and onboarding infrastructure framework. You know, that's very important because when something happens, then it comes down to why was this customer onboarded? So you need to make sure that that is solid even from day one. You cannot, that's not something that you think about when you've gone live and then you're learning on the go. That's not acceptable because you're going to pay daily for it. And then the third thing would be transaction monitoring. You need to have that in place. It has to even be live before you go live, right? Because when your first fraud incident happens, it's not going to wait for you. If you don't have your velocity limit set in place, if you don't have your MCC control set in place, if you don't have your alert system set in place, I think I'm minding the first transaction, even at the point of the first transaction, we already have MCC controls in place where you can't do transaction on certain MCCs, right? All of those has to be in place before you launch a card program. If not, you're just on a race to the bottom. And I think the fourth thing would be your reconciliation and settlement. You know, you need to understand where your money is at every point in time. You need to understand what your charges on your commercials, what it means to you and to your customers. Because at the end of the day, that is what would even inform your pricing. So you need to understand what you have at every point, what is outstanding, what are settled at every point in time. Because if you don't have clear visibility on that as well, like I said, you're just on a race to the bottom. And I think the last thing that I would say would be your dispute and chargeback management system. That has to be in place as well, because the card scheme has like very strict guidelines and timelines around how disputes and chargeback are being handled. So if you don't have proper processes in place for that one, you're exposing yourself to financial loss, right? Because if you don't meet certain timelines, you get fined by the card scheme, and also you're exposing yourself to even penalties from the card scheme, because now you're having certain numbers of chargeback within a certain number of time. It then shows that you're doing something wrong. It shows that you don't know what you're doing. It shows that there are gaps within your controls. So top of my head, I think those are like the 5 major things that you would need to have in place. Number one is the stable processing. Number two would be your KYC onboarding framework. Number three would be your transaction monitoring and fraud control. Number four would be reconciliation and settlements, knowing where your money is at every time. And I think the last, but definitely not the least, is the dispute and chargeback system has to be in place before you think of going live. Thank you.
Thank you so much, Counselor, for that very detailed response. I think I would piggyback on your response for my next question to Japhet. So when Counselor was speaking, she mentioned fraud, and there are a lot of research around how card programs have the highest rate of fraud within the financial ecosystem. What would you say is the best way for a fintech to properly build out their fraud management program? And how would you say is the best way for them to position to ensure that, they don't get shut down in the first 3 months, or because they've lost so much money to fraud, or because the card schemes feel like they don't have their compliance program properly set up? What would you say are the key things that they need to do from a fraud management perspective?
Thank you. So I think to answer this, they need to first understand the environment, understand who the clients are, understand the flow of funds, understand the type of risks that they are going to face. And by understanding this, they can then, look at the different interconnected elements, the whole journey, and then plug in controls, plug in rules that would apply to each of those journeys. So by journeys, I'm referring to, so when you've onboarded with the card scheme, for instance, who are the users you are bringing on board, right? Who are the users? What kind of transactions are they doing? Have you onboarded them properly? Are you able to tell they are who they say they are? Have you done, have you verified, let's say they've supplied the ID, have you verified the ID that has been provided? Have you done like a face matching, in comparison to, the images of the users? Have you done all the checks you need to do to be sure that these people are who they say they are? And then what are the funds movements? What are the types of transactions the users want to do? What do they say? Like when they were requesting for card, for instance, what was the use case? So by that and by understanding the whole journey of your card program, you're able to place rules. In terms of the type of systems to put in place, frauders moved differently from COVID time. In COVID, we saw different types of fraud schemes, specifically attacking cards. It was easy to obtain funds fraudulently through cards. So many social engineering schemes. So fraud has evolved. Understanding the kind of fraud that there is now would serve as an input into what kind of systems you need to put in place. So there are different systems. I know even the card schemes have their own different fraud solutions, but there are so many fraud solutions. I think the key is to understand the type of risks and the type of controls you need to, the minimum requirements these solutions need to have to be able to scale. So by solutions and by requirements, we're talking of, behavioral systems that can systems that can help you tell, a user's transaction is out of pattern. A user's, they are trying to transact on a different MCC code they've never transacted on before. Velocity thresholds. They are doing transactions with different types of counts that were not in their existing patterns, that were not in their existing behavior. So those are like behavioral rules you can place. These systems need to have behavioral configs that will enable you catch patterns that are relating to behaviors. There's also machine learning. Tools that will attack today's type of fraud needs to have machine learning capabilities. There's case management, there's threshold monitoring, there's MCC monitoring, the different types of MCC codes, different types of categorizations, where if you've placed certain rules to block certain types of MCC codes, you don't even need to think twice. You know that the tool is operational, it's blocking this, and you're seeing the data on what has been blocked. So these are just a few items, but critical items to look out for in a solution, to look out for in terms of monitoring, to look out for in terms of for providers, for partners to look out for in terms of preventing fraud, ensuring that they have good systems, even without onboarding with different fraud solution providers. There are things that can be done bare minimum internally with data. We're talking of chargeback controls, we're talking of velocity. These are things that can be done bare minimum without even a fraud solution, just by configuring things internally.
All right, thank you very much for that very detailed response. So you've said that what the most important thing is research, which is understanding your environment, understanding your customers, and then having necessary rules and systems in place tailored for those exact systems, and then having rules and systems that could also learn with patterns, not rules and systems that are static and could become archaic over time. Thank you so much for that. My next question will be for Coinsola. Well, in today's fintech world, a lot of fintechs don't have their own primary licenses. They most times work with partners. So what would you say is the best way to ensure operational accountability when you have to rely on third-party processors and service providers as a fintech that wants to run the card program?
All right, thank you very much, Rama. So relying on third-party partners or processors, I mean, that's inevitable in this space, right? But what you need to have in place, I think I've said this like 1,000,001 times over, is visibility. So even though you're relying on a third-party process, you're still going to be responsible for it. You're still going to be accountable. And for you to be accountable for something, you need to have clear visibility on it, right? So visibility helps you put your own internal controls in place. You need to know what is happening end to end, even though it's happening on your vendor. For instance, you have a fraud monitoring tool, for instance, that you've outsourced to a vendor. Even though you're not doing it internally, you should get reports, timely reports, maybe even real-time access, right? Just to see what is going on, what is happening. Because at the end of the day, these are your cards, these are your customers, right? So accountability does not shift. When you outsource a solution, it does not even reduce your responsibility in any way. I think what it actually does is that it increases your need for control, because now you need to know what is happening even on the third party end. So once you have visibility in place, you have like near real-time access. What you need as well is strong SLAs with your partners. Roles and responsibility has to be clearly defined. Everybody needs to know what they're doing, because at the end of the day, right, when regulators come, when your sponsor bank comes to meet you and say, oh, something is wrong somewhere, you cannot be pointing to a third-party vendor. That is a failure in itself, right? You have to take responsibility. And even your customers, at the end of the day, your customers don't know your third-party vendor. So at the end of the day, you need to know what is happening. You cannot say, oh, I'm sorry, it's my third-party processor that caused it. That doesn't fly. I think that I would yank you off immediately if I were your sponsor bank, So you need that visibility, you need strong SLA in place, and you need to have ownership. So even though the vendor is executing some of this process, you need to have like an internal owner that is responsible for all of these steps end to end. So that way, when questions come, when incidents happen, you have a clear oversight as to what has happened. Because if you don't have that in place, you now have to rely on what your vendor tells you. And most of the time, they'll probably shift liability, because now you don't have any data to back up whatever they're saying if you don't have visibility. So I think that the most important thing to have for operational accountability would be to have visibility into whatever is happening, even on your vendor's end. Number two is to have clear SLA, because it's contractually binding, so everybody knows what they have to do at certain times. And when incidents happen, we all know who is responsible for what. And also you need to have clear ownership, because at the end of the day, like I said, you are going to be responsible. It's your partnership with the bank, and they are your customers. Because now, if you don't have those sets in place, you open yourself to a different kind of risk, because you are the one that they know. You are the one that your sponsor bank knows, not your third-party processor. So having those things in place, I think it helps with operational accountability as well. Thank you, Rama.
All right, thank you so much, Counselor. So what Counselor is basically telling us is, for us to do this, we need visibility, very important, and ownership. You cannot rest on your laurels and feel like, oh, I have a third party that is doing something for me. You need to also have visibility into what is being done, and you need to take ownership, because at the end of the day, these are your customers. I hope that so far we've been learning from our two speakers. Thank you so much. This has been really insightful. Japhet, I know that you've spoken about fraud programs, you've spoken about KYC, KYB policies and things like that. But a lot of times when financial institutions or fintechs generally are facing audits, either by their primary regulator, either by their third-party vendors that have audit rights over them. A lot of times they might not know the best evidence to put forward in the form of how to ensure that they are properly positioned. I mean, this is not to say that they're trying to pad their system, but what evidence to put forward in terms of like putting them in the best light, and also ensuring that they are not giving out too much information. I mean, confidential information on their customers. How best do you think they should position themselves for audits of this nature, and what are the things they also need to have put in place internally to ensure that they are prepared when these audit requests are made?
Thank you for that question. So the truth is, many organizations, they miss out on preparing for audits from the moment they sign that contract, from the moment they go live, right? So you don't start preparing for audits when you've been notified of an audit. You start preparing from day one. You start, putting in the systems in place. You start putting in the processes. You are making sure that, you are operating in line with regulations, in line with agreed SLAs, agreed contracts that have been signed. So if you're already operating in line with this, then in a way, when audit comes, you have a ground to stand on. You know that you already have things you're going to develop on. However, if you've waited for when auditors come, that's when you now start putting together things already. The chances of you passing through that audit well is already slim, right? So in terms of preparing for audits and in terms of providing feedback during audits or providing evidences, there are a number of things to look out for. There are a number of things that would recognize as strong evidences. There are a number of responses, and even in audit, there are a number of things that are being asked or looked out for. So the first is having documented policies and procedures. These are not just operational documents. Policies, procedures, they carry dates, they carry steps, they carry governance, they carry responsibility, they carry structure, right? So from an audit, from a document, from a policies point of view, from a procedures point of view, if an audit comes and you're able to provide this, clearly defining not just what has been written or a promise to what will happen, but actual operational things, you're already having a strong footing. That is just saying that the company has a good structure in place, a good corporate governance system in place. So documented policies and procedures. Again, it's not just about writing. It's not just about getting it signed by all means. It's about, are we following this? Is this the best? Is this what we are meant to do? Is this what are we operating in line with what we have been advised or whatever contract we've been advised? So another point also is systems in place, the system logs, and then the decision records too, right? Are we having the right system? Are you having the right system? Are the systems giving you optimal performance? Are the systems having the right logs, audit logs that if an audit comes and you're being asked, okay, provide me evidence or walk me through this, are you able to confidently walk through those items? Logs as well. Logs, when you're being asked for logs, is the system keeping records of bare minimum maker checker, bare minimum, when activities happened, what system did it happen on, who approved it? These are all things that needs to be saved. These are all things that systems need to have the capacity for. By systems, transaction processing systems, compliance system, operational systems, in fact, customer support systems. Those are things. Take, for instance, customer support system. Those are where, when you're being audited, they want to see, okay, how are consumers engaged? Those are some of the things that are being looked out for. Another is something like case management system, case management records. When issues come in, are you able to provide the logs even to auditors when you're being asked or you're trying to provide defense, in chargebacks, you're trying to provide defense. Are you able to pull out these records? In audits, these are some of the things that are being looked at. Screening and monitoring outputs, whether sanctions, whether PEP screening, those are all systems that you need to have, and all these systems need to have evidences to provide for audits, evidences to be able to walk through, during audits, that there are systems that are operational, there are systems that are giving value to the institution, and then there are systems that are giving, that are putting the company on a good light when it comes to audit. And I think the final point I'll add to this would be regular reporting when transactions are monitored, when chargeback rates are monitored, when basically everything that has to do with monitoring, everything that has to do with performance, there needs to be regular reporting on it. And then these reportings, there are reportings that you do to, whether to the board, whether to management, monthly, weekly, senior leadership team. All of these things needs to be, evidential. These things needs to be auditable. When you're being asked, okay, provide evidence of, last quarter reports, you should be able to provide evidence of that. PDF, PowerPoint. These are all things that are serving as logs during audits, that are serving as evidences that auditors will be able to look at, whether it's when they cut schemes, they'll be able to look at it, they'll be able to review it, they'll be able to assess the impact of what you're doing, the impact of your systems, the impact of your structures. So at the end of the day, in audit itself, audit is a part of compliance, and compliance isn't really, it's not proven by policy. At the end of the day, it's proven by patterns, decisions, logs, systems you have in place, and what you're able to prove. Yeah.
All right, thank you so much. Just to give you a quick summary, so essentially we need to have documentation in place, and those documents need to be backed by evidence. So as soon as you're signing that SLA, as soon as you're starting that program, you need to start like putting these things into place. You need to start operationalizing your policies. You need to down to the very minimal thing, how you're treating your customers, how you're responding to disputes, not just the big things around compliance or fraud or all those other things. You need to like take everything down to like the very granular level of ensuring that the necessary things that needs to be in place are in place. Thank you so much, Japhet, for your response. My next question will be for Koinsola. Going to the operational parts of audits, part of the things that the card rules expect you to put in place are audit logs of transactions, of processes and things like that. What would you say are the requirements that you need to have in place for this audit logs, and what are the what breaks when these things are not in place from like an operational perspective?
All right, thank you very much, Rama. So to have an audit log that you can use to do any kind of investigation, it has to be centralized. You cannot, like we mentioned earlier, you have third-party tools that are going to help you do stuff, right? But you cannot have situation where your logs are not centralized, where they're sitting in silos on different vendors or tools. You need to have a centralized logging system across all your environments, where it would be like a source of truth that will show you the true picture if an incident happens and you're able to investigate properly. And I think apart from having a centralized logging system, they have to be tamper-proof, right? You can't just go and edit. Even internally, you shouldn't be able to delete your logs, right? Because at the end of the day, it's not just about keeping the logs. It helps you know that you're in control of your system. It helps you identify issues. When something has happened, maybe in a case of fraud, for instance, you're able to tell who has accessed what did they change at what time, right? Having been able to answer all of those questions, even during audits, it just shows that you're ready and you're serious-minded. And also, once you have a centralized logging system, it has to be tamper-proof. And also it helps show seriousness as well. It's not just about having them, like I said, you have to be able to download them. Like you cannot take months or weeks to be able to access logs of maybe a week ago or a month ago. It has to be something that you can produce on the go. So it's not just about keeping the logs. It's about asking yourself the questions that are the logs consistent? Do they have the same format across board? Where you're able to, because if they don't have the same format across board, now reconciliation is hard. How do you match everything across your entire environment? And also, once you have those visibility, you know what is going on. And another thing would be, it has to be tamper-proof. I think I already mentioned it. It cannot be editable, because that now shows seriousness. Because at the end of the day, if you don't have those logs in place, it shows that you are not in control of your system, right? It shows that you cannot answer the end-to-end question when it comes to your transactions on your system. And it just shows that a lot of things are happening outside of your control. So admitting those requirements really helps you helps you investigate incidents when they happen, and it helps you for audit record as well. Because when auditors come and you don't have those logs in place, the fact that you don't have it in place, you're already failed, right? So it helps you with regulators as well. When they come, you're able to provide these evidences as to at a certain day we had this incident, this is what was done, show the logs and the proof as well. So those are the things I think would break if you don't have a proper login system in place.
All right, thank you. Thank you so much, Coinsola. I think we are almost at the hour mark. So at this time, I really want to thank our speakers. But before we take questions, I would like us to give any last words that we have in terms of what fintech should put in place from an operational perspective, from Coinsola and from Japheth from a compliance and from an anti-money laundering and fraud perspective, compliance from Japheth. Just as a recap of like everything, what are the key things that you know that, okay, after all is said and done, this is like your Bible. This is something that you cannot do away with. Thank you. I think I would let Japheth start. Thank you.
Okay, thank you so much. So fintechs should adopt a structured, risk-based framework that covers identification, that covers assessment, that covers control and monitoring. Right. In practice, this basically means when we're talking of risk identification now, we're saying across the products, across the geographies, across the customer types, we must be able to assess these risks. We must be able to score clients based on all of these factors. This scoring must also be dynamic, not static, right? At the end of the day, scoring will tell you, okay, what kind of risks am I exposed to? What kind of, limit should I give these clients? What kind of monitoring should I apply to these clients? Another would be, client segmentation. When you've done the risk assessment, you've done the risk identification, how do you segment clients? So fintechs need to be able to segment clients, whether by, levels. Banks, especially like in Nigeria now, they classify clients based on, tier 1, tier 2, tier 3. This tiering system is also based off of KYC levels and level of due diligence that users that are meant to be applied to users. Another item would be having controls and ongoing systems in place, ongoing monitoring systems in place. What do I mean by ongoing monitoring systems in place? This is where your fraud systems come in, your compliance systems come in, your sanction screening system, your monitoring system, your sanction screening system, your PEP screening system. All of these are things that fintechs needs to integrate. Companies need to integrate as they are going live or as they've become operational. Another would be having clear governance structure. A lot of fintechs, the way they start, they call it speed but without structure, speed but without systems, speed. They call it speed basically, but there's no accountability in that speed. There is no structure. Anybody can do anything. The CEO is the compliance person, is the operations person, is the customer support person, is the marketing person. So this lack of clear governance, lack of structures are some of the gaps we've seen over time that fintechs needs to put in place. But to round this up, right, I will just say there are basically four big elements that fintechs needs to pay attention to. The first would really be the fraud and AML systems. I've mentioned that. The second would be, in terms of governance, it will be the lines of defense. First, second, third line of defense, having clear organograms, having governance, having monitoring, having frequent check-ins, having clear reporting lines. That's another one. Then the risk identification I mentioned really falls under, the dynamic risk assessments, everything, risk identification, risk classification, risk scoring, everything really falls under dynamic risk assessment. And then I would like to add, vendor and third party risk management into it. because a lot of times fintechs, they are partnering with different vendors. They are partnering with vendors providing core services, providing operational services, providing backbone services. Hence there's a heavy reliance on, fintechs, heavy reliance on APIs. So they need to, have like a vendor risk management system in place where vendors are assessed, their compliance level are checked, their SLA is signed, SLA is monitored, their controls are checked. If it's like a card scheme, for instance, you're also checking, card security, you're checking cyber security. So basically, these are bare minimum things that fintechs need to look out for and to ensure that they've properly ticked those boxes as they operationalize.
Thank you so much, Japhet, for that. Thank you. Thanks, Sarah.
All right, thank you, Rama. Just to piggyback on what Japhet said, we all know that fintech is a very fast-paced environment. Everything is moving at the speed of light, But one thing that cannot be an afterthought are your processes. Because at the end of the day, when you move very fast without structure, without controls in place, you're going to come right back, or you're just on a race to the bottom. You have to have set processes in place. Processes around your dispute management has to be in place, because at the end of the day, it's a business, right? And if you don't have these processes in place, you're on track to losing money, serious money, And also, you need to have your vendor management process in place. I know Japhet had mentioned something around that, but you need to be able to know, what does this vendor, what do they do for you? What's the impact of their service on your own internal system? If for instance they are down for like an hour or 2 hours, what does that mean for you and your system? You need to be able to risk rate all of your vendors accordingly, so you know what control measures you have to put in place. Do you need to have like backup systems in place because of the high reliance on this third party vendor? Just making sure that you collect all the documentation as well. You want to be sure that they have the proper certification to be able to do what they are doing for you. If it's something that they need a license for, are they properly licensed? Because at the end of the day, all of this has a way of coming back to bite you if you don't do your vendor management and process properly. And another thing would be your onboarding policy. Like, you just have to have your policies in place before you. I know that the fintech want to fly as soon as possible, but at the end of the day, everything comes back to the regulatory. Everything comes back to your bottom line. If you don't have all of these processes set in place, how to manage, how to onboard your customers, because when something happens, all the risk lies on you. You need to be able to control your bottom line, control the transactions that are happening on your system. You need to be able to make decisions by yourself. You need to understand what is happening end to end. And also reconciliation and settlement. Like Japhet mentioned, CEO would be customer support, would be doing every other thing. While that is good and fine, there's some things that cannot be an afterthought. Like, for instance, like compliance. Product wants to launch something like yesterday, but compliance cannot be like a final check where they say, oh, come and see what we've done, come and see what we built. No, they have to be involved in the conversation from the get-go. Even as early as the business ideation stage, compliance has to come in and say, oh, based on the license that we have, we cannot do XYZ, or we need XYZ licenses or certifications to be able to do these things. And also, even if there are risks involved, they're able to point out the risk involved and how to manage those risks. Because when compliance is not involved from the get-go, that is a compliance mayhem waiting to happen. Just having all of these controls in place, all of these policies in place would help you. It will just help you build a solid system in place even before you launch your card program. I think that's what I would have to say. Thank you, Rama. You're muted, Rama, if you're speaking.
Thank you so much. Thank you so much, Japhet. Thank you so much, Kanisola. I think a quick recap would be that you need to have your processes in place. You need to have your systems in place, because at the end of the day, all these things, while you might think they may be expensive, they affect how successful your program is. I think for the next 5 minutes, we'll take a couple of questions. If you have any questions, please drop them in the chat box. Thank you. The ones that we can take, we will send responses across as the speakers respond to them. So I think the first question is, what's your thoughts on having a defined offboarding policy and process as a way to manage risks in the card program? This is from Ola. I think this question will be for Japhet.
Thank you. So a defined offboarding process. It's an interesting question because a lot of fintech companies they don't consider this. A lot of companies don't consider this. They just, when they've banned you, or when they're restricted, they're restricted. They don't factor this in, and it's a very critical aspect. So a defined offboarding is not just a governance nice to have, right? It's a core risk control. And one of the things that make up a solid offboarding framework is really, when you have controlled exit of risky partners, it means you can quickly suspend or terminate access when you've seen something risky, you've seen fraud, you've seen breaches. Another would be that's a way to contain your data, a way to contain access, ensure that your API keys, being accessed, settlement rights are all revoked. Of basically they've all revoked. You've revoked all those permissions for those kind of merchants that you've seen as suspicious. So offboarding policy basically defines all the checkers the same way you're onboarding them. Those same type of checkers you look out for, right? Those same type of checkers. Look at it as, when they are offboarding a staff now, a staff has standard resignation, right? Before they leave, HR, infotech, information security, control teams, they are being sent a list of checklists. Okay, check. Is this staff still having access to, admin system, having access to client data? So they start removing all those things. So it's the same thing that applies to offboarding policy. It needs to be defined. Everything that the partners or the clients had access to, it needs to be removed. It needs to be documented, because it needs to be documented. It needs to follow this defined process that you can also pull it out as evidence for an audit, or as evidence as means of regulatory engagement. It will help you in terms of regulatory defense, right? It also protects you in terms of you're basically blocking any exposure you might have in terms of funds. Maybe that kind of partner had some of your funds with them, or they still have access to certain things that can expose you. So at the end of the day, for me, I agree. I'm aligned to these thoughts of having an offboarding policy. It's critical. It needs to be well documented. It needs to be reviewed at least, once a year, to be updated, to also fit into different products and different client types, different accesses, so that nothing is missed out, nothing is exposed, nothing keeps the company, exposed, whether reputationally or regulatory wise. Yeah.
All right, thank you for that. There's a question here around managing compliance teams. It says, how can compliance team manage increasing regulatory demands in card programs without experiencing operational burnout? I think that's also a Japhet question. It looks like there's a lot of compliance questions here. Maybe we would answer that offline because we have like 1 minute left. The next question is, what governance structures are most effective in ensuring accountability and oversight in card program operations? This is for Coinsola. I think it'll be our last question before close for the day. Thank you.
All right, thank you very much, Rama. So for governance structure, the most effective in ensuring accountability and oversight in card program operations, it would be your clear ownership. You have to clear responsibilities, rather. You need to know what you're responsible for at every point. Each team needs to know what they have to do at every point. It cannot be uncertain, right? There's no room for uncertainties, because when issues happen, you need to be able to hold somebody accountable. I mean, at least somebody has to be accountable. So that has to be in place. And continuous visibility as well. You can't afford to be finding out issues from your customers or after the fact, right? Continuous visibility, real-time visibility is also important as well to be able to manage accountability in card program operations. Thank you, Rama.
All right. Thank you so much, Japhet and Koinsola. And thank you so much for everyone that joined this afternoon. We are now at the hour mark. So all other questions we will send to the necessary participants via email. Thank you so much for joining this afternoon. And thank you so much to our speakers. And do have a good rest of your day and week.
Thank you very much, Rama. Thank you, everybody, for joining. Bye.
Thank you.